Welcome to The Explainer. Today, we are breaking down one of the absolute most fascinating heavyweight matchups in the entire pharmaceutical industry right now. We're talking about the GLP-1 gold rush. This is really the structural growth story defining modern medicine and the markets alike, and it stars two absolute giants, Eli Lilly and Novo Nordisk.
To really wrap your head around the sheer magnitude of this boom, you just have to look at this one number, $19.8 billion. That is Eli Lilly's reported revenue for just the first quarter of 2026. I mean, it's a staggering figure, right? And it firmly anchors the massive scale of patient demand that we're seeing unfold in real time.
Okay, let's dive into this because that $19.8 billion, it definitely doesn't exist in a vacuum. That represents a massive 56% year-over-year revenue growth for the company. And if you're wondering what's driving this explosive surge, it's primarily volume growth from just two medications, Mounjaro and Zepbound. The market expansion we're seeing here is, quite frankly, unprecedented.
Section 1. LLY's explosive Q1 2026.
And this brilliantly illustrates exactly how fundamentally re-rated they are. Just look at the gap in this 5-year cumulative total shareholder return. Think about it this way. If you had invested $100 in Lilly at the end of 2020, by the end of 2025, that would have returned an incredible $670.56. Compare that to the S&P 500, which returned roughly $196 over that exact same period. Lilly has just wildly outperformed both the broader market and all of its pharmaceutical peers.
But what's really wild is that this momentum isn't necessarily stopping anytime soon. Even with the stock trading around the $1,004 mark recently, which is up 38% over the past year, by the way, Wall Street analysts remain firmly bullish. The consensus price target sits at $1,218. That implies roughly a 21% upside from current levels, and some of the high-end targets are reaching all the way up to $1,344.
And the fundamentals absolutely support this bullishness. Just look at these Q1 highlights. Lilly's non-GAAP earnings per share jumped an astonishing 156% to $8.55. Management is so confident in what's happening that they actually raised their full-year 2026 revenue guidance to a range of $82 to $85 billion. Plus, they went ahead and executed $2.4 billion in share repurchases just in the first quarter alone. They are generating massive amounts of cash and returning it to shareholders at a really rapid clip.
Section 2. The GLP-1 Market War.
Now, what's really interesting about this slide is how the power dynamic has shifted. Entering 2026, Lilly's Mounjaro and Zepbound have really pulled ahead, capturing a 60.1% share of the U.S. GLP-1 market. To put that into perspective, their combined sales haul reached roughly $36 billion in 2025. That effectively pushed them right past Novo's combined semaglutide portfolio.
However, we really need to view this objectively. Yes, Lilly is absolutely gaining the lion's share of new momentum right now, especially over in the obesity category. But Novo Nordisk's Ozempic and Wegovy, they remain incredibly powerful, deeply established brands. Novo has been smart, implementing strategic price cuts and broadening access. And because of that, Wegovy is still driving a highly meaningful share of new U.S. prescriptions. Make no mistake, this is a fiercely contested two-horse race.
Let's move to Section 3 and see how this builds. The next frontier, oral pills.
So why does an oral pill matter so much? Well, it all comes down to the supply chain. Right now, these weekly injections require really complex manufacturing and incredibly strict cold chain shipping. It's a huge logistical headache. Pills, on the other hand, are significantly easier and way cheaper to produce and distribute at a massive global scale. Whoever commands the oral market is going to completely reset the accessibility and the underlying economics of these therapies. It's a total game changer.
And the pipelines for these pills are advancing incredibly rapidly. Right now, Lilly has a distinct timeline advantage. They actually just secured US FDA approval for Foundayo, which is also known as orforglipron, specifically for adults with obesity. Meanwhile, Novo Nordisk is pushing hard with amycretin, which is a dual GLP-1 and amylin agonist. Novo is moving amycretin into a very broad Phase 3 clinical program in 2026. So while Lilly is clearly the first one to the finish line on approvals, Novo's dual mechanism pill could prove to be a highly potent competitor once all its data matures.
Section 4. Regulatory tailwinds and compounders. For the past couple of years, compounding pharmacies have created this massive grain market for these drugs, mostly due to all the branded shortages. But now that the branded supply is finally stabilizing, the FDA is stepping in.
On April 30, 2026, the FDA proposed excluding semaglutide and tirzepatide from the 503B bulks list. Let me translate that jargon for you. This rule is effectively designed to block large outsourcing facilities from mass-producing these compounding copycats. If this gets finalized, it's going to funnel a massive wave of patients straight back to the official, branded prescriptions of Lilly and Novo.
And then add to that the demand side of the equation. The Centers for Medicare and Medicaid Services just announced they are extending the Medicare GLP-1 Bridge program all the way through December 2027. Guys, this is huge. It gives millions of seniors access to these obesity medicines, and it caps their out-of-pocket costs at just $50 per month. That is a massive regulatory tailwind that's going to drive really long-term, sticky volume for these companies.
So the crucial point is Section 5. LLY versus NBO valuation.
Looking directly at their financial profiles, it's like a heavyweight boxing match, and the market treats these two stocks very differently today. Lilly trades at a really steep premium forward price to earnings multiple. I mean, they are priced for perfection right now, which reflects their big pipeline lead and the rapid margin growth coming from their scaling incretin franchise. Novo Nordisk, on the other hand, trades at a much more moderate forward multiple, falling much closer to the broader pharmaceutical sector average. But Novo boasts this incredible structural margin edge that they've built up over decades from their massive historical scale in insulin.
Breaking it down totally neutrally, investors are basically looking at two completely distinct cases here. The Lilly case is all about buying premium growth. You are paying a higher price today for absolute market dominance, massive momentum, and that proven lead in the oral pill pipeline. The Novo case, however, is a classic value reset. You're buying an established incumbent with massive global brands at a bit of a discount, which offers a much wider margin of safety if their next-generation drugs execute as they plan.
So weighing Lilly's absolute pipeline momentum against Novo Nordisk's structural margin of safety, which thesis fits your portfolio? It really all comes down to a question of your timeline, your personal risk tolerance, and exactly how you view the future of this generational medical breakthrough. Something to really think about. Thanks so much for joining me on this explainer, and definitely keep your eyes on the data.